I'll get right to it. My name's Nick. I'm just some bald guy.
Ohio. Colorful like an Indian. Well, thank you very much. I get that a lot. You guys almost ready? Oh, my absolute pleasure. I'm happy to be here. Thank you for being part of the community. All right, that's the sign. Good morning. Welcome to Forex.Today, the YouTube community of more than 18,000 traders. Isn't that amazing? 18,000 foreign exchange traders. That's really cool. So we gather here approximately 9 a.m. during the summertime hours to align our satellites, synchronize our watches, and get ready for technical analysis, fundamental analysis, trader psychology, or anything else that you want to cover during our hour or two. So without further ado, let's get on with it. All right, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. And again, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com, and I'm also your guide here on the Forex journey. Ask questions, get involved, click the like button, tell YouTube this is quality content. Ask questions, get involved, take notes, leave comments on recordings. What else? Treat each other with dignity and respect. I'd also like to thank Traders Way for being part of our community. They've earned my loyalty and respect as a broker. Maybe they can just earn yours as well. TradersWay.com. Bottom right-hand corner, you can open up a demo. MT4, MT5 are available. Some other platforms are available as well. The cool thing is if you want my chart templates, things like my indicators and my profiles and the templates. Oh, you're kidding me. You're going to be able to get those already. Hang on. My doorbell is ringing. You kidding me? And it's my workers. You're kidding me. Dude, I asked them to give me a heads up. I don't know. I don't know what. Shoot, I might have to go. You're kidding me. Or at least pause. Anyway, so check it out. Today is the 1st of January, what we call Canada Day. Happy Canada Day. We've been talking about Canada Day, or July 1st, for months and months and months of being a key turning point in seasonality. And on this exact day, boom, Japanese yen crashes. You're welcome. We're also on things like double bottoms. Also, yesterday, Aussie was weak, Euro was weak, CAD was weak, Pound was weak, Kiwi was weak, Swissy was weak, Yen was strong, Dollar was strong, and now Aussie's recovering, Euro is skyrocketing, CAD is skyrocketing, Pound, Kiwi is skyrocketing, okay? Dollar's weakened a little bit, but Yen has crashed on the exact day. The exact day. Thank you, seasonality. Holy smoke. So maybe this is meaningful. Maybe it's not. Maybe it's a coincidence. Maybe it's confirmation bias. But hey, you know what? It's a good start. I stink. Oops. Right? It's a good start. Yeah, you know what it is I ordered those. Do you guys remember like 8-9 weeks ago, I ordered 3 doors and it cost me something like $15,000 for 3 doors. Hey, they're nice doors. They arrived, and so the workers are going to pop them in. But you know what? I pinged them. I'm like, are you going to be here today or tomorrow? Today or tomorrow? Today or tomorrow? Ding dong. Right? Dude, come on. So anyways, I might have to just go. All right, so the thing is, wow, did that drop to 33? You're kidding me. Did it really? Shoot, last time I looked at it, it was 36. The thing that we're looking at here is, will this continue to go up? And is this a turning point in sentiment? See, the interesting thing about the last couple of weeks, it was the end of the quarter, end of the half. Lots of profit taking. Now that we're in the new quarter, you got to deploy your capital. You got to deploy your capital. You can't make money if you're not in the market. And this might be a key psychological turning point. So when you're looking at gold, for example, okay, back into the game, that's interesting. So now you have to decide, do you think it's going to go up? Okay, that's a decision. Okay. And if so, what are you going to do about it now if that's an opportunity? Now, one of the things we talked about just even yesterday, that if you're a bear, you're going to look to take this. And if you're a bull, you're going to look to take something closer to that, right? Actually, not like that, more like this. Okay, but the thing is, if you're going, you can sort of play it on smaller time frames up, because we should be going to the top of the range. And then, of course, a long-term bull would take a look at this and say, well, breach, pull back, and long and gone. So you can get back in the game if you're a bull. But you want to see other asset classes moving too, right? Is this a gold issue or is this a dollar issue? Or is this a risk on in general? Well, look at oil. OPEC meeting today, by the way. Okay, oil is rallying, gold is rallying. So gold priced in dollars, okay? Crude priced in dollars. Is this a dollar play? Well, we saw the dollar isn't actually that weak right now. So is it a macroeconomic issue? Okay, so we scan out and say, what about exotics? Okay, so a dollar's weakening versus the Mexican peso. I caught it for the 19th time at $20 or 20 peso. Okay, now you switch over here. How about our rand? I got to zoom in here. Okay, and it's not doing a lot. It's farting around here, but it is toppish, don't you think? Okay, so that's kind of holding, but you can see this is still very, very technically still bullish. So you're like, well, that's very inconclusive. But those are exotics. Okay, now exotics are going to be sensitive to higher interest rates and stuff. So right now that shows sort of a pause in that sentiment. So then let's take a look around on dollar pairs in general. We're looking at, is there an opportunity for a turn? That's all, right? We have dollar strength the last 2 or 3, well, actually all the month of June. Is July going to be dollar strength? Is it going to be dollar neutral, or is it going to be dollar weakness? So let's take a look, because if you're going to turn a market, okay, this is the V shape that we talked about that I said I wouldn't expect. But the thing we did talk about expecting is more of a double bottom, and then maybe a 1, 2, 3. Okay, this is the psychological level of 140. Okay, so as you know too, when you breach through a psych level, this is typically a sell. What we're looking at here is more of a seasonality issue of perhaps lots of profit taking. We don't know for sure. We know there's a change in the sentiment of the Bank of England and stuff. But the question is this the right price? Well, double bottom could be. And is this the right time? July 1st could be. Now, we know next week is going to be very quiet. Okay, we know next week is going to be very quiet, but maybe there's less profit taking, less downward pressure. And that's the beginning of neutrality. And then I would suggest maybe by the end of summer, we start that. So are we moving from profit taking to market neutrality? Maybe. And that's what I'm looking for here. That would be the right price, and today would be the right time. How about euro? Go out into a 4-hour chart. Okay, we have this marked for some reason, exactly this price. I don't remember why. But the question is, are you going to treat this as a double bottom? Okay, which means you would have to buy a pullback. What do you think? Okay, if you're a bull, 1, if you're a bull, 2, you're at support, which is, I would indicate as double bottom. 3, okay, grab the pullback. Peanut butter and jelly, okay? If you want the jelly, you got to trade the pullback. So drop in now, Now, what an amazing coincidence, okay, that this is the last day of the first half. This is the first day of the second half. What an amazing coincidence, right? So the thing is, now that you might have a bullish engulfing candle off of your double bottom, are you going to buy a dip? And if it doesn't work, what's the risk? The risk is the distance between your entry and your stop. And where would your stop be? Well, probably below that, right? And you probably try again. If it doesn't like tank to 117, then it might just fart around here for a while, and you might actually try 2 or 3 times. Be careful with that. Okay, now the equal but opposite would be this one, and this is what we talked about yesterday. Let me get rid of that. One of the things we talked about yesterday is here and here, plan A, plan B, if you're bullish on the Canadian dollar or bearish on the USD. You see that? And so plan A, I wouldn't say is Oscar Mike, on the move, but it's holding. It's holding. And now we have a bearish engulfing candle. So maybe on a 15-minute chart, do you trade a little pullback? Is anyone going to do that and have this plan A going into NFP tomorrow? Price Action Kid says, aren't we kicking off the monthly and all that? Yeah, well, sure. I'm just dumbing things down, right? There's typically what you'll see, right, Price Action Kid, is there will be a confluence of all kinds of information. There might be 19 reasons to buy the euro dollar, but you only need one, right? If your trade plan is backed up by fundamental analysis. If it's not backed up by fundamental analysis, then you will need multiple reasons, right? But like, for example, going back to here, like the simplicity of trading, okay, if we know that somewhere in here there's some serious risk for profit taking, and that this would be the likely, there's no other reason for it, just likely based on human behavior, so behavioral finance. If this is the out, this would be the likely beginning for an in. Okay? So if you were already planning on an in and you have a double bottom, do you really need 19 other reasons? You're like, no, I'm going to buy it. Now, you might buy it because of your CCI. Someone else might buy it because of their MACD. Someone else might buy it because of a Stokes. Someone else might buy it because of an Elliott wave. Someone else might buy it just pure fundamental. Someone else might buy it because they were told by their boss to start buying July 1st to deploy capital throughout the summer. Someone else might buy it simply because of a double bottom. Someone else might buy it because of a pullback off of a bullish engulfing candle. Someone else might buy it, whatever, who cares, right? The thing is, do you have a plan? And that's what I'm trying to thread together here, okay? Kiwi, a very, very weak currency right now. And again, on July 1st, the first day of the second half, amazing that we're right back to where we were April 1st. Cool. So now what? How are you going to play this? Are you going to keep selling it below 70? Are we on our way to 60? Okay? Or are we on our way to, let's just say 75? That's going to be, well, that's 74. Okay? Are we on our way, so let's make that a little more balanced. Are we on our way to 65, let's say, from 70 to 65, or are we on our way to 75? Okay, which is up here, actually. Okay, which way? Okay. Okay, Sander asks an off-topic question, and I do want to address this. Wayne, I mentioned that it might be a good time to add bank stocks to the portfolio. Well, I've been adding European bank stocks because I believe 2 years from now there'll be a steepening of the yield curve. But I think last Friday, I think on Friday, I broke down a reasoning for buying stocks, U.S. bank stocks, based on the stress tests. Do you guys remember this? And I said that they had extreme levels of excess reserves to the point where the Fed doesn't even require doesn't even require reserves, right? They have so much ER that you don't need RR. You guys remember that? And I said, what's going to happen? I said on Monday. Okay, that was Friday. I said on Monday, these banks are going to announce that they're going to give that capital back because they passed the stress tests, and the Fed's going to say, you know what, you got so much capital, we're going to remove all restrictions. You can do whatever the hell you want with this capital. And most, if you were the If you were the CEO, you want the stock price to go up. So you're like, well, I'm going to raise the dividend and I'm going to buy back the stock. How many people remember this less than a week ago? It was Friday. Does anyone remember this? Anyone can confirm that, right? That this was going to be announced on Monday? No? Nobody remembers? I think it was Friday. If not, it was a swing trading group. I can't remember now. Maybe it was Thursday. Clear as day. What was it? Was it in the Forex.Today or was it in the FX Bootcamp swing trading group? Okay. Okay. So, did it happen? Was it announced? Morgan Stanley 2 days ago doubled its dividend. Two days ago, banks will boost payouts. New York Times, CNBC, U.S. banker, big banks raise dividends after Fed affirms their strength. 2 days ago. I told you 6 days ago. CNBC told you 2 days ago. New York Times told you 2 days ago. American Banker told you 2 days ago. I told you 6 days ago. Oh my God! 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 Barron's told you 4 days ago. You're welcome, by the way. You're welcome. Okay. So anyways, cool. 5 of the 6 largest banks boost dividends. That's interesting. So that was 6 days ago. All right, so let's see. Morgan Stanley said it would double its dividend. The bank also approved 10 to 12 billion in share buybacks. Wells Fargo said it doubled its dividend. Okay. Goldman Sachs said it would raise its dividend to $2 a share from $1.25, so almost double. JP Morgan said it would boost its dividend to $1 per share and continue buying 30 billions in repurchasing shares. Bank of America said it would increase its quarterly dividend by 17%. And they will buy back 25 billion in shares. You're welcome. Okay, you're welcome. Cool, right? Cool. So anyways, so are you going to trap it and are you going to look for opportunities to build off the right shoulder? All right, this is a double bottom. Okay, so are you going to, right? Look at this, watch. You can call this the inverse head and shoulders. So now are you going to buy dips based on trading a double bottom starting July 1st? The day capital can come back. Okay. Williams said, would you say the fundamental driving U.S. dollar strength has ended? I'm not saying that at all. I'm saying this is seasonal. And it might be. So one thing that you could watch as evidence. Is it okay that I go fundamental on you? Okay. Oops. Sorry. All right. We've been watching this recently. I want to kind of make a point of it now. Okay? That between now and the end of the year, we're going to be at 2% again. And as that happens, as this yield goes up, the dollar is going to weaken. I know you weren't taught this in college. Just quiet your mind for a second. Okay? Because 2% is fine. Okay? For a 10-year T-note. So what it will do is raise mortgages. So if you think the real estate industry is red hot now, wait until market participants think that if they don't buy soon, right, then they're going to have to pay a higher interest rate. The behavioral finance part, well, let's say traditional finance says everyone's rational and they're going to lock in as interest rates fall. Okay? Now, behavioral finance says that's nonsense. People are not going to buy when they're falling. They might buy when it stops falling, but how long of a duration do you need before people think that it's stopped? A month? 6 months? A year? But really what happens to get people off the fence, they have to think interest rates are about to go up. And if they don't buy now, they're going to have to pay more later. So now they're like, you know what? I got to buy now. I have to buy now. I have to buy now. So when that starts to happen, when the interest rate starts drifting up to 2%, the dollar's going to weaken. Okay? Now, why is the interest rate going to go from 1.46 to 2.0? The Fed is going to buy less and less and less and then stop buying completely. Okay? Starting in September. Cool. While that happens, the stock market's going to go up and up and up. Stock market hit an all-time high yesterday. Cool. Okay? And it's going to continue up, is my thesis. So this could be a time when you try Fibonacci. It's not the best. It's not really a trend, but it is a dip. Okay? And then, of course, Aussie. Okay, let's go to like a 4-hour here. Okay? Same trade as yesterday. Down, 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 down. Whoops, it's a little too large. Okay. Down, 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 da, 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 da. Ooh, oh, Okay, what do you think about that? Well, let's back up. That would be a double bottom play. Remember, you don't have to play a double bottom. The best play is either something like this, or even better, something like this. Let me make that one a little bigger, just so it's easier to see. Okay? You got it? So, it's a trade. But notice that it's another double bottom on exactly July 1st. Okay? It's not that I'm playing the psych level of 75. It's not that I'm playing next week's M2. All those are valid. But really, it's the right price, meaning a double bottom, is by definition support. And the second thing, it's the right time, meaning Q2. Sorry, H2. Okay. Okay. So all the money that left, okay, by September 1st. So we have all of July and all of August. So let's call that 8 weeks. I think it might actually be 9 weeks. But let's say over the next 8 weeks, every penny that has left the market will come back. And we're going to try to, to build upon that wind in our sails. And as to say it differently, most of the money that's going to leave would have already left by now. So if you want to think of it as wind, we went from wind blowing us dead south, due south, strong wind heading us south. All of a sudden, the wind has stopped. And it's slowly going to start blowing north. And it'll take time, but it'll start blowing north again. Okay? So I've been trying to just keep the sails down, nose to the wind, and now, because the thing is, I'm trying to sail north. Okay. Now maybe this isn't the best currency pair. Australia is in partial shutdown and all that kind of stuff, but it's simply a trade. Okay. That's the cool thing about being a trader. Okay. It's just a trade. Cool, right? So hope for there, but you know what? Let's build upon that. Oh, what? Boom, shalakalaka. Look at that. Holy smokes. Okay. So how are you going to treat this? Are you going to trap it? Nobody pinged me back after ringing the doorbell. Okay. Okay. What are you going to do? How are you going to play it? Which one are you most bullish on? Okay. Now, this was me doing an inverse head and shoulders trade, right? Here's the weekly sell. Here's where we anticipated a possible bounce. Check this out. Okay. Beautiful, 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 beautiful. Now, the psychology of the trade may have been not obvious in that moment. Okay. But again, notice the radical change in market sentiment, or at least behavior, on the last day and first day. Pretty cool. So what's your next plan, son? What do you think? Anyone going to do that? Cool. Hey, by the way, how many people are using these chart templates? Charlie says, are Kiwi and Aussie strong fundamentally? Not at the moment, no. Every day, very cool. Yeah, the biased ones, yeah. Cool. Okay. Did you know I updated them? I haven't sent out an email yet. I updated them 2 weeks ago in the auto installer. and they seem to be quite nice. I added new tools like the biased pivot points. Again, right now they're only in the auto installer, but now you can do things like this. You can go to indicators, custom, and then you could add price action pivot points. Okay. Look at that. It's calculating pivot points based on price, but not market. Because remember, the way the pivot points is calculated is, the high, low, and close divided by 3. This is not using that methodology because using the high, low, and close in the previous period, you're saying based on what happened yesterday, based on what happened last week, based on what happened last month, these would be the buy and sell zones. Well, this is not doing a period. It's a rolling average. So over the 55 candles here, here's the open, high, low, close kind of, right? And what I've done is I've dumbed it down and said this is a buy zone and this is a sell zone. So if you're a bull, you're buying dips, right? But it's keeping you focused also on what is the trend? Is this a bullish trend or a bearish trend? Okay. It's nice, right? Isn't that nice? Just like somehow it's just clean. You're like, oh, because sometimes it's nice to have a reminder because you might be sitting here going, I should sell. I mean, I don't know what you're going to do. I'd look at that now and say, well, I don't want to sell. I don't want to sell, right? Because M is greater than 0, right? Y equals MX plus B, right? M is equal rise over run. And in this case, right, rise over run is a positive number, right? An integer. It's not in the downloads, Kevin. It's in the auto installer. I don't have it in the downloads yet. I wanted people to play with them, test them, make sure they're working on both MT4 and MT5, both on demo and live, on ECN, non-ECN. There's a lot that goes into these into the programming. And the vast majority of files have been reprogrammed. So if you just run the installer and you're like, oh, I already had all this crap. Well, no, it's been reprogrammed to be more stable, more efficient, more reliable. Okay. So, hey, and I raised the price from $5 to $5. So, right. Cool, right? 200 files for $5. Seems like a reasonable deal. You know, it'll blows you away though, and you might find this really funny. If you found it on YouTube, or not YouTube, if you found it on Google, like you clicked an ad, I pay something like $50 to sell you something for $5. I pay like $50 to sell you something for $5. Cool. All right. Okay. Same thing. Okay. Interesting, right? Weekly M2, by the way. So that is predicting weekly M4. That's your Kiwi yen. You beast. Here's the beast. Okay. Now, this has a few extra things. What I've done on this, maybe you go to the daily. Okay, there's a lot going on here, right? What I've done is I've removed, this is the standard 55 EMA, and this is the one predicting where it will be in the future. This is the standard 21 EMA. This is it predicting where it will be in the future. Because remember, they're lagging. So one of the tools in the, I think it's the complete toolkit, is this EMA where we remove the lag. Called zero lag EMA. Okay? And then you can make some adjustments and stuff. This is my standard setup. Okay, but cool, right? So one way of looking at it is on this time frame, late yesterday, okay, technically, right here, last night, basically Asia opened, basically the first hour of the day, okay, on this time frame, this asset class or this asset became technically bullish. Okay? And you'll see it told you several hours before the standard cross. Okay? Now the idea is riding the moving average. Oops, let me clear this out. Delete. Okay. Now the idea is this. It's what you're trying to do if you're a bull. Okay? Now, you can see the way I have this set up. If I go to my indicators and we have bias pivots, this is set for bearishness. Let's set it to bullishness. Okay? So this is now weekly pivot points. Okay? And maybe you're saying, because today is Canada Day, now you're interested in becoming a buyer. Okay? And look at that. Isn't that neat? And we also know that 53.50 currently is next week's buy price, which you will probably get today. Okay. Now, the big thing is, tomorrow's non-farm payroll. So anything can happen there. We'll talk about that tomorrow. Okay. Yeah, we're looking into that, Calv. We're looking into that. Okay. So you see when I back out, you're asking yourself, really, what do you think about the future? Are we going to make it to 55? Is this a bottom and is this a lower high? Okay. Meanwhile, you'll have forces that are looking at things this way. This is where fundamentals help. Okay? Because right now you're like, well, how do I know which one is which? Well, you don't. Nobody does. You have to know which one you're looking for. So by the end of the year, pound yen will be higher, is my thought. Okay? That's my thought. Okay? Well, will it do this first? Oh, it could, couldn't it? I don't plan for that now. Okay? But I think what could happen would be more like this. Okay? So you'll have to come up with a bias. What's the next stop? 160 or 150? Are we going to go up 500 pips or are we going to go down 500 pips? Well, right now I'm going to try to bring it back up to 160, but I have to be cautious because I'm right in the middle of that zone. I'm at $1.55, actually $1.54, right? Okay, so the way I do that as a bull now is I say as long as it's making lower highs, or sorry, higher lows, sorry. So I could say, well, let's try to add something that will make it easy to see. Okay. Right now, you see the slope, M. M is equal basically plus 0. Like it, look at the slope here. Look at the slope. You can see it here and you can kind of see it here. It's hard because it overlaps, so I'm going to guess it's kind of like that. Okay. Slope is not negative though, is it? Am I right? Okay, negative, let's say neutral slope, M is equal to 0, is a beginning, which means as long as I'm connecting, as long as I'm playing that trend, okay? That's right, Kevin. You have to admit it's called price action pivot points. So I'm playing that with some sort of expectation of that in the future would be the normal logical thing. But actually what I'm thinking is not normal and logical. Okay. And I'm thinking more like this. Okay. I'm prepared to really kind of expect this. Okay. And by the end of July, could we be back here at 151? Yeah, we could be. Okay. Yeah, these things happen, but I'm still a buyer of the dips, and I'll manage my stops in such a way that if we do come back down, I'll either get knocked out for some small profit or I'll get knocked out at break even. Grumpy Cat says it's a wedge, but don't think of it as a wedge. Okay? Like, technical analysis is a self-fulfilling prophecy, right? And so you'll say, well, the wedge predicts this. Okay? Let's say. Okay? Not that that's a wedge, but that's what the wedge predicts. Now, for that to happen, you need buyers to come into the market. But we already know at least 50% of the buyers are not going to come back to the market. They're on a boat, yo. They're water skiing. They're surfing. They're shopping for Rolexes in Dubai. They're not staring at the charts. So what could happen is people get frustrated. They'll trade the technical wedge, let's say in that case, right? Like, I'm not saying you're wrong, but I'm saying I don't think of it that way because I don't anticipate the wave of money following behind the pattern. So instead, I'm trading more of the bias where, okay, I'll buy dips. I'll buy dips. I'll buy dips. And on the long run, right, I'm expecting a higher high. On the short run, I am not expecting a higher high. And there's a difference. Okay? And by the way, this is a problem in economics all the time where we say, long run versus short run. All the time. Okay? So like, what is long run growth? Okay? If you look at this potential GDP, which we call Y, and then actual GDP, okay, you get business cycles. So sometimes you're underperforming, sometimes you're overperforming, and then it'll lead to underperforming again. And businesses can go through this depending on how much investment they put towards, are they investing just to counter depreciation, or are they investing more than depreciation, or are they not investing at all and such? Okay, so there's this process. But when you say potential GDP versus actual GDP, right? So you could say Y prime, for example. Well, then we know growth is constant at 2.2% in the United States. So therefore, you could also argue, okay, that Y is constant on top of demand for something and on top of supply for something. Oops, well, that wasn't good. Yeah, I think I can fix that. Okay? So you can say supply and demand and, right, on the short run versus long run productivity. On the long run, you're not, right? Anyways. So I'm saying on the long run, yes, we will have growth in the value of this asset. On the short run, I'm just looking at buying opportunities, and I'm not really anticipating a great exit per se. Okay? Because I know I need someone else to come in and buy it behind me. So I buy first, then someone else has to come in and buy it at a higher price. Then someone else has to come in and buy it at a higher price. And then someone else has to come in and buy it at a higher price. And then I need some idiot to buy it for me at the highest price ever. What kind of loser would buy what I bought 3 weeks ago, 6 weeks ago, 9 weeks ago? What kind of idiot would buy this from me in December? I don't know. But I need that to happen, right? So right now, I think all the idiots are out, vaping and getting new tattoos and not doing the market. Okay. So I'll buy because it's cheap. I'll buy because I think that this energy is gone. But I'm not thinking that yet. Okay. But it'd be great if I can build a position first. That would be great. Okay. But I don't know what the market conditions are going to be. I don't know the volume and volatility, but I know, right? I know in 8 weeks, 10 weeks, I know in 10 weeks, I know in 12 weeks, we will have all the volume and volatility we want. So how do I get from today to 12 weeks from now? What? Hoorah! Coolio. And that's it. I think I'm done. Spent. Thank you for being on my team. Thank you for being part of Forex.Today. Please like, please subscribe, please leave comments. Thank you to Traders Way. Thank you to you for your hard work. If you're in my live trading group, at fxbootcamp.com. I will see you today at 2 p.m. to do some swing trading with you. So I'll see you over there. If you want to join, here's the process. You go to fxbootcamp.com. You pay for the video training courses. And then it'll say, hey, do you want to join the live trading group too? Dude, it's $99 a month. It's not a big deal. Cool. And then I'll see you at Romper Run. Peace on earth. May the pips be with you. Oh, and I forgot to tell you, all my South African brothers and sisters, I got my Johannesburg, the Wanderers Club. Nice, huh? Look at that. Cool. Hey, I know I'm super casual today. It's my way of saying, hey, today's the first day of summer. Okay? And by the way, I got this at the club. I had dinner at the club with Ryan. How do you like dumb apples? Anyways, peace on earth. May the pips be with you. May your profits be above average. Cheers.